Owning a luxury car isn't just about turning heads or feeling the thrill of power under the hood. It's about stepping into a lifestyle of prestige, class, and responsibility. Yes, we are talking about the luxury car tax. But wait, do not frown. This is not a burden, it is a badge of honor. Because when you invest in your dream machine and proudly pay your luxury car tax, you are doing more than just ticking a legal box. You are contributing to smarter roads, better infrastructure, cleaner air, and a future where premium driving experiences stay sustainable and elite, just like you. Be proud. Be responsible. Be the elite driver who fuels more than just horsepower. You fuel progress. Across the USA, UK, Australia, and Canada, owning a luxury or exotic car comes with more than just admiration. It comes with hefty taxes. But here is the twist. Is this luxury car tax a burden on your wallet, or actually a blessing for the society? What if we told you the tax you pay on that Ferrari or Tesla Roadster could be shaping infrastructure, reducing pollution, and even helping your local economy? Stay with us till the end, because we are diving deep into how these taxes work, how governments use the money, and most importantly, how you can benefit from these systems if you play really smart. Welcome to Gear the Vroom, where speed meets strategy. Let's roll. Luxury car taxation is not just about penalizing the rich. It is a tool for economic balance, environmental consciousness, and public revenue. Let's explore some key countries that impose specific taxes on high-end vehicles. The first country to start with is Australia, which introduced the luxury car tax in 2000. That is, if a fuel-efficient luxury car costs more than 91,387 Australian dollars, or a non-efficient car costs more than 80,567 Australian dollars, an extra 33% tax applies on the amount above the threshold. This tax helps to fund healthcare and roads and discourages unnecessary emissions, targeting those vehicles that contribute in environmental pollution. Administered by the Australian Taxation Office, luxury car tax is aimed at discouraging unnecessary spending on fuel-inefficient vehicles and ensures that luxury consumption contributes more to national revenue and sustainability. Moving forward to the next country. It is Canada. In September 2022, as part of the Liberal government's election pledge to make the wealthy pay more, Canada rolled out a luxury tax targeting vehicles priced over 100,000 Canadian dollars. Managed by the Canada Revenue Agency, the tax is either 10% of the full value or 20% of the value above 100,000 Canadian dollars, whichever is lower. This progressive tax channels funds toward public programs and aligns with Canada's clean transportation goals and promotes green alternatives. In a word, taxation implementation of Canada acts as a lever for economic fairness and sustainable development. On an equal footnote between Canada and Australia, Canada's model gives more flexibility for buyers, while Australia's thresholds strongly favor electric and hybrid purchases, which is a slight edge in terms of environmental planning for the future. Now, it's time to talk about the United Kingdom. Though the UK doesn't have a standalone luxury tax, it implements 390 Great Britain pounds as a yearly surcharge for cars priced over £40,000. The tax system of the UK rewards the green cars and penalizes the polluters. Last, but not the least, it is the United States of America. In today's time, there is no federal luxury tax, but the gas guzzler tax applies to inefficient cars. In addition, states like California and New York impose extra registration and emissions-related fees. The USA tax concept is, it's all about climate responsibility, not just collection of cash amount. So, in a nutshell, luxury car taxes fund essential sectors and create incentives for cleaner technology, nudging the market toward electric and hybrid innovation. Coming to this part of the video, it's time to know about the tax benefits of electric vehicles and the money burden on petrol-diesel cars. Nowadays, governments globally are favoring electric and hybrid luxury cars with tax exemptions and incentives. Here, it needs to be mentioned that in Australia, electric cars under the luxury car tax threshold enjoy fringe benefits tax exemption authorized by the Australian Taxation Office, which alternatively saves thousands of Australian dollars annually for the company car users. In Canada, luxury electric vehicles can qualify for up to 5,000 Canadian dollars in federal rebates plus provincial incentives. Also, there are few luxury hybrid cars exempted from the luxury tax if the price is below 100,000 Canadian dollars. If we look in the United Kingdom now, it is the electric vehicles that pay no road tax and no luxury car surcharge. This is a huge amount, saving over the next 5 years. In addition, we already know about the UK's emissions-based tax structure, which rewards electric vehicles. In this race, the USA is not far behind. Under the Inflation Reduction Act of 2022, eligible electric vehicles can receive federal tax credits up to $7,500. In the USA, zero-emission vehicles often qualify for state-level perks like free tolls, high-occupancy vehicle access, and visible registration discounts. So far, the contrast is very clear. Go electric and save more. Luxury electric vehicles are not just status symbols anymore. They are smart financial moves, thanks to governments prioritizing clean energy goals over luxury car taxation. Now, let's have a look inside the world printing and online media to know a bit more on the same portion of luxury car tax. According to the Sydney Morning Herald and ABC News Australia, the fringe benefits tax exemption is part of the government's broader climate plan. On the other hand, the Canada Revenue Agency confirmed the continuation of the luxury tax for 2024. With vehicle prices rising, more exotic models now fall into this tax bracket. As reported by CBC News and the Globe and Mail, there are discussions underway to raise the 100,000 Canadian dollar threshold, but nothing is finalized. Fingers crossed for the dreamers. At this stage, if we want to draw a comparison tax line between Canada and Australia, it would be suffice to say, Australia's tax threshold favors environmental incentives, especially with the fringe benefits tax exemption, which significantly benefits corporate electric vehicle ownership. On the other side of the coin, Canada is transparent in tax implementation and lacks such widespread, corporate-focused electric vehicle benefits. This is for sure that Australia is one step forward among all the developed countries for aligning taxation with environmental and corporate incentives. Perhaps this section of the video is the most awaited part. Here, we would go for the sample tax calculations. Let's break down the tax hit on some popular luxury vehicles across 4 countries. For Australia, the most favorite brand of luxury car is BMW. To buy a BMW X1 non-fuel efficient car, it requires approximately 85,000 Australian dollars, where the taxable portion would be 4,433 Australian dollars, and the luxury car tax is 33%, amounting to 1,463 Australian dollars. In total, 86,463 Australian dollars. To buy a BMW 9/3 electric vehicle, approximate price would be 89,000 Australian dollars. Under the luxury car tax threshold, no luxury car tax applied, and additional benefit is fringe benefits tax exemption for corporate use, hereby considering more savings. For Canada, we will go for Mercedes as sample tax calculation. To buy a Mercedes-AMG 1 worth 3 million Canadian dollars, 10% equals 300,000, and 20% of 2.9 million equals 580,000. Hence, payable amount would be 300,000 Canadian dollars as luxury tax. Taking another vehicle as a sample tax calculation would be more helpful. The 2025 Audi RS e-tron GT Performance, amounting approximately 179,000 Canadian dollars, as per the tax calculation, 10% of 179,000 would be 17,900, and 20% of 79,000 would be 15,800 only. Hence, payable amount would be 15,800 Canadian dollars as luxury tax. In the USA, the estimated price for Tesla Roadster is $200,000 US. No federal luxury tax in this scenario, and qualifies for electric vehicle federal tax credit up to $7,500 US. In the United Kingdom, a Rolls-Royce Droptail worth £2.5 million, based on carbon emission first-year tax would be £2,365 and surcharge would be £390 per year, equals to £1,950, including the next 5 years term. Hence, for Rolls-Royce Droptail in the United Kingdom, total tax would be £4,315 over 5 years. Governments are slowly shifting gears. In the USA, the Federal Electric Vehicle Tax Credit offers up to $7,500 off your dream car, encouraging buyers to go electric. Meanwhile, the UK government has slapped heavy CO2-based taxes on luxury petrol vehicles, creating a tough environment for polluters. Canada is going green too, with generous electric vehicle rebates, while still maintaining a firm stance on high-end gas-powered imports. And in Australia, lawmakers are considering abolishing the luxury car tax entirely for electric vehicles in order to promote sustainability. This would be a game changer if implemented successfully. These tax systems are not just policies. They are signposts pointing toward the future of mobility. And whether you're buying your dream ride or planning your next big investment, understanding these tax dynamics could definitely save or cost you in thousands. Here's your gear-shifting moment. Governments across the USA, UK, Australia, and Canada are redefining what it means to own a luxury car in 2025 and beyond. In Australia, discussions are heating up about abolishing the luxury car tax for electric vehicles, signaling strong support for sustainable mobility. Canada's Luxury Tax Act, enacted in 2022, continues to evolve, with the Canada Revenue Agency hinting at future reforms to better support electric vehicle adoption. The United Kingdom's Road to Zero strategy emphasizes penalizing polluters while boosting zero-emission ownership. And in the USA, federal and state governments are pouring billions into electric vehicle infrastructure and credits, making luxury electric cars more affordable for the dreamers of owning a luxury car. Whether you are planning to buy a Rolls-Royce, a Tesla, or just exploring your greater options, you need to understand how taxation impacts affordability. That is what you enjoyed for the last few minutes of your precious time. So, here's what to do next. Without any fail, subscribe to Gear the Vroom for various insights, car tax hacks, and luxury vehicle trends. Consider dropping a valuable suggestion in the comments box. Or let us know, what luxury car would you buy if tax was not an issue anymore? It would be great if you can hit that bell icon that would lead you to never miss another episode where passion meets practicality. This is Gear the Vroom, where luxury rides and smart minds collide. Thank you for being with us. See you in the next video.